Hey everyone, welcome back to the channel. So I have a special video today. I'm going to show you an options trade that I made that allowed me to make 50% in just 4 days. So what I'm going to do in this video is show you what options strategy I used to be able to create this kind of profit and why it's really a low risk trade, but you still get a decent return from it. Now, options trading isn't something I do a whole lot. As all of you know, my main investing strategy is value investing, investing in stocks that are cheaply priced based on their future cash flows. But every once in a while, if I do see an opportunity to trade options, I will take that opportunity, and that is what I did this week. And what I did with Amazon is I traded an option strategy called a bull put spread. So I did this as a short-term trade with Amazon. So what I did this past Monday, I bought weekly options that were expiring on Friday. So that is tomorrow. We can take a look. November 13th. So on Monday, I entered a trade on Amazon options that expired the Friday of that week. And so what I did was I was looking to sell an option. So for options, you can be a buyer or a seller. And statistically speaking, it's better to be a seller of options than a buyer of options, just because the vast majority of options expire out of the money, expire worthless. And so you're able to take advantage of this if you are a net option seller and receiving a credit for your options trades instead of being a net buyer and paying out a debit. So what I did on Monday was Amazon. This was this day right here. So Amazon was trading at call it 3,200. And so what I did was I'm still short-term bullish on Amazon, even though long-term it's a different story. And so what I did with Amazon is I sold a put option below where the stock was currently trading. And I bought a put option with a strike of $3,000 that was expiring on November 13th. So what I was in effect doing was selling someone insurance, saying that if Amazon stock drops below $3,000 by the end of this week, I will buy Amazon from you. And so for taking on that risk, I receive a credit. But that's not all I did, because if you sell a naked option like that, you open yourself up to potentially unlimited losses. And that's not something I want to do with my investment portfolio. So then what I did after that was I bought a put option one strike below the put option that I sold. So that would be $2,995. And what this does is this limits my losses. So for any reason, if the stock price of Amazon just fell off a cliff and went straight through $3,000, even though I sold the put option, which would expose me to unlimited losses, that put option that I bought slightly below the put option that I sold would limit the risk that I have in this trade. So essentially what I was doing is acting like an insurance company. I sold the put option to offer someone insurance on Amazon, and then I myself bought reinsurance for that same trade to limit my risk in the worst case scenario of Amazon going down past $3,000 by the end of this week. And this is an option strategy called a bull put spread. When you sell a put option below the current stock price and then you buy another put option at the same expiration, a couple of strikes below the put option that you sold. And this is one of my favorite option strategies out there, because it allows you to have a low risk trade where you can still have a high probability of profit if you are bullish on a certain stock or index. So now let's take a look at specifically how much it cost for me to enter this trade and what happened after that. So here we are on the options chain for Amazon, and these are the options that are expiring November 13th, 2020. So that's one day from now. Today's Thursday, the day that I closed this trade. And so on this chart, this black line is the 3,000 level. And so it was Monday morning when I opened this options trade. So basically what I was saying is I don't think Amazon stock price is going to be below $3,000 by this Friday. And so like I explained, I sold the put option at $3,000, which was here, and then I bought the put option one strike below at $29.95 to limit my risk. And so when I did that, I received a net credit. Since I was a net option seller, I received money for this trade instead of actually having to pay money. And now it's always important to look at the risk to return graph. So what we're going to do is analyze this trade to see what it looks like now. All right, so here is the risk to return graph based on Monday where I opened this trade. And so the green line is the profit and loss at expiration, which was only a week away at this point. So this is where I was planning to hold it until. And so of course the break even is right at $300, because that's where I sold the put option. And then the max gain would be at expiration anywhere above $3,000. And so we can take a look at the max profit and loss. And so for the max profit, it would be around $14. And I'll show you where I entered the trade. I actually got credited more than 14, and the max loss is $485. Now, even though this may seem out of whack in terms of risk to reward, I took this trade because I knew there was a very low chance that Amazon would trade below $3,000 within a week. To measure this, you can look at the delta, which is the percent chance that an option will expire in the money for the 3,000 strike price. The delta right now is a 0.06. When I bought it, the delta was a 0.1. So that means there's only a 10% chance of Amazon stock being below $3,000 within the week of me entering this trade on Monday. And so when all was said and done, I got credited $30 for opening up this trade. And so in retrospect, this was absolutely the worst time to open a trade on Amazon, where a couple of things happened this week. The first thing that happened is we got news of a vaccine working. And what that did was that caused all of the stay-at-home stocks that have been carrying this market through this year, it sent them all shooting down on the assumption that all those companies would suffer now that everything would go back to normal. Now, the second thing that happened with Amazon specifically is that they got hit with a lawsuit, I think by the EU. It was an antitrust lawsuit, something about monopolistic behavior with Amazon. And so again, that took the stock price down as well. So we had two really bad days in a row for Amazon stock. And so again, when I enter this trade up here, probably around 32.50, there's only a 10% chance of Amazon stock getting to $3,000. But just a day later, this was on Tuesday, Amazon stock was trading at $3,020. And so this was the risk I was taking on, even though I held on to the trade because I didn't think the stock was going to keep dropping. And I was right, as we ultimately saw a rebound on Wednesday and Thursday. And so that just shows you how powerful an option strategy is like this, where you can have a stock drop. This was a solid 7-8% drop in a couple days, and I managed to still make a profit on this trade. So then what ended up happening was Wednesday we had a nice update for Amazon. Thursday we followed through, and earlier today, Thursday, I decided to close this trade out because of the time decay that went on. The options were now trading cheaper than when I previously bought them on Monday. So now I was able to buy them back at a much lower price. And even though I could have waited until tomorrow, Friday, to realize full gains on these options, I wanted to just take my risk off the table in the event of another huge red day for Amazon and just lock in my profits while I had them today. So what ended up happening, I closed the options trade today. What I did was the opposite of how I opened it on Monday. I bought the $3,000 put and then I sold the $29.95 put to cancel out my positions, and to do that I paid a net debit of $15 per contract. So all in all, I made a 50% profit on this options trade. I opened the credit spread for a $30 credit per contract, and then I closed the trade just 4 days later for $15 per contract. And so that 50% is just based on the money that actually went out of my account. But if you want to factor in the total risk, the risk was around $450 per contract. So even if you take that as your max loss, $15 out of $450, we can take a look at what that is. 15 over 450. So that is 3%. And again, that's just in a week. So annualize, what is that? It's like 150%. So I just wanted to make this video to show you the power of options if you know how to use them correctly, and how you can take advantage of low risk opportunities in the stock market. And even when you have two massive down days going against you on the stock you're trading options on, you still can come out with a nice profit. And so even though I could have just taken this profit out of my investment account, I always like to reinvest my gain. So what I did with that profit was I bought more Altisource stock, the stock ASPS, Altisource Portfolio Solutions stock, a stock that I've been bullish on and I still am. For anyone that doesn't know, you can watch my analysis of the stock. I'll have the card up now, but they provide foreclosure services. And we just got news out this week that foreclosures are on the rise. So that is good for Altisource stock. But despite this, a huge drop today, the stock dropped 7%. And so I used the profit from my options trade to pick up more shares of Altisource on the dip. And over the next 3, 4, 5 years, I see the potential for a huge upside with the stock, so I will continue buying. So that's it for this video. Just want to show you how I use options to generate cash flow. Even when the stocks in my portfolio aren't going up or are even going down, I'm still able to bring in gains from these options trades that I can then reinvest into the stocks that I own. So I know I haven't talked about options too much on this channel, so drop a comment if you want me to talk more about these options trades and how I find them and how I set them up, and if you want to see more of these types of videos in the future. So if you found something of value from this video, hit the like button. If this is your first time watching the channel, subscribe and hit the bell icon so you don't miss a single video I post. And so that's it for now, and I'll see you next time.